Welcome back to Investing Talk Podcast. Today we're going to be looking at MPLX.
MPLX.
You might not know them yet, but stick with us, and you'll know if you should add it to your watch list or your portfolio or whatever.
Yeah, definitely.
We've got like financial reports,
Yeah.
expert predictions, even some news and technical analysis to go through.
Yeah, and one of the first things I noticed was just MPLX's performance lately.
Yeah.
Like, it's not just a random jump. It's like a real trend upwards that's caught my eye.
Yeah, MPLX has climbed over 8% since the beginning of 2025 alone.
Wow.
It's at $51.88 a share as we're recording this, and that's like on top of all the growth we've seen since April 2024.
Yeah.
So what's behind all this growth?
Well, their Q3 2024 financials tell a pretty interesting story.
Okay.
Their net income is way up from last year, and they had a 7% increase in adjusted EBITDA for the first 9 months of 2024.
Nice.
Plus, their cash flow from operations is strong, like $1.4 billion strong.
Wow. And they're not just sitting on that cash, right?
Right.
They just said they're going to increase their quarterly distribution by 12.5%.
Yeah.
That's a pretty big sign. They're feeling good about the future, don't you think?
Absolutely. It means they think this success is going to keep going and they want to share it with investors, you know?
Yeah.
One reason they might be so optimistic is this new processing and fractionation project they have in the Northeast.
Oh, right.
They think it's going to make their EBITDA even better.
That's awesome. And speaking of the future, Coin Codex thinks MPLX could hit $54.56 per share by the end of February.
Whoa.
It's like a 5.83% gain in just a few weeks. But before we get too excited, we got to talk about those technical indicators you mentioned before.
Yeah, right?
It's important to remember that even though things are looking good, some of those indicators are saying MPLX might be getting into overbought territory.
Yeah.
So for people like me who don't really speak technical analysis, what does overbought actually mean?
Well, imagine like a super popular video game.
Right.
Everyone wants it, so the demand goes way up, and so does the price.
Uh-huh.
But at some point, the price might be higher than what the game is really worth.
Right.
Doesn't mean the game's bad or anything, but the price might need to level off before it can go up again.
So
That's basically what overbought means.
okay, that makes sense.
Yeah.
So even though we're seeing this overbought signal, we've also got the moving averages and the MACD both pointing towards a bullish trend.
Uh-huh.
So how do we put those two things together?
Well, the moving averages especially help us see the long-term trend, and the MACD shows us how strong those price movements are.
Okay.
But remember, just one indicator doesn't tell the whole story. We got to look at everything.
Right. So we've got these good signs, but also this little warning sign. What's an investor supposed to do with this information?
Well, that's where your own investment strategy and how much risk you're okay with come in. Are you okay with prices going up and down a lot in the short term? Or do you want something that grows slower and steadier?
Right. Okay.
Yeah.
So let's take a second and sum up what we've learned.
Okay.
We've got MPLX, a company that's doing well, has a bright future, and could give us some quick profits.
Yeah.
But we've also got this overbought thing, which could mean there might be a little trouble ahead.
Exactly. If you're worried about things going wrong, a stop-loss order could be a good idea.
Okay.
It basically sells your shares automatically if the price drops below a certain point so you don't lose too much money.
Well, that's smart.
Yeah.
Okay.
Yeah. Yeah, that's a really good way to manage your risk, just in case things get a little shaky. But, one thing that really impressed me about MPLX while I was researching them was their focus on sustainability.
Oh, really?
Yeah. It's not something you usually think about with pipeline and energy companies, but they're actually doing some pretty cool stuff.
Yeah, you're right. That's not the first thing that comes to mind. What kind of things are they doing?
Well, for starters, they're putting money into renewable energy projects. And they're looking into carbon capture technology, and they're really focused on running things as efficiently as possible to minimize their environmental impact.
So they're not just talking about it. They're actually doing something about it.
Exactly. And that's important for a couple reasons. One, it shows they're thinking ahead and adapting to how the energy world is changing. The world's moving towards cleaner energy, and companies that don't change with the times might get left behind.
Like they say, adapt or die, right?
Exactly. And the second reason is that these sustainability initiatives can actually help their bottom line.
Oh, how so?
Well, being more efficient means lower operating costs.
Right.
And getting into renewables can create new ways to make money.
So it's good for the planet and good for business. Win-win.
Exactly.
But are there any risks or challenges for MPLX that investors should know about?
Of course, no investment is completely risk-free. One thing to think about is that they depend a lot on the energy industry as a whole.
Oh,
Even with the move to renewables, oil and gas are going to be a big part of the energy mix for a while.
right.
So if demand for oil and gas drops significantly, it could affect their business.
That's a good point.
Yeah.
What about competition? Are there other companies in the midstream space that MPLX needs to worry about?
Definitely the midstream sector is getting more and more competitive, so they got to stay on top of things and keep innovating to stay ahead.
So it's not just going to be easy street for them.
Right, exactly. But keep in mind, we're not financial advisors. This isn't financial advice.
Right.
Our goal is to give you the info you need to make your own smart decisions about your investments.
I agree. Knowledge is power. The more you know about the companies you're thinking about investing in, the better decisions you can make. You mentioned their relationship with Marathon Petroleum earlier. Can you tell us more about that?
Sure. So Marathon Petroleum is actually their parent company, and that partnership gives MPLX a steady flow of business and lots of opportunities to grow. It's like a real team effort.
Yeah, the power of synergy. I love seeing how those kinds of relationships can help both companies. Speaking of benefits, we talked about their recent distribution increase, but do they have a history of giving back to shareholders in other ways?
Oh, yeah, definitely. They have a great track record of paying dividends, which is always good news for investors who are looking for income. And they've also been buying back their own shares.
Can you explain why share buybacks are a good sign for investors, for those who might not know?
Sure thing. So when a company buys back its own shares, it's basically reducing the number of shares that are out there.
Okay.
This can increase the value of their remaining shares because the company's earnings are now divided among fewer shares.
So it's like they're making each piece of the pie bigger?
Exactly. And it also shows that the company thinks its own stock is a good deal and worth investing in.
Interesting. So to recap, we've got a company with strong financials, a positive outlook, a commitment to sustainability, and a history of giving back to shareholders. Sounds like MPLX is checking a lot of boxes for potential investors.
Yeah, it definitely seems that way. But as always, do your own research, figure out your investment goals and how much risk you're comfortable with, and make decisions based on your own situation.
Good advice. Now, before we wrap up our talk about MPLX, let's take a step back and think about the bigger picture of the midstream energy sector.
Right.
You mentioned earlier that it can be kind of a hidden gem for investors.
Right.
Can you tell us more about that?
Definitely, midstream companies are super important in the energy world. They're the ones who move, store, and process oil and gas. This means they're not as affected by changes in oil and gas prices compared to companies that are actually finding, producing, or selling those things.
So they're kind of like the steady ship in the middle of a storm.
Exactly. And that stability can be really attractive for investors who are looking for consistent and predictable returns. And midstream companies tend to have strong and reliable cash flow, which often leads to nice dividends for investors.
Dividends, those are always nice to hear about for us
Yeah.
income investors. So how does NKLX compare to other companies in the midstream world? What makes them stand out?
One thing that really sets them apart is their integrated business model. They have a bunch of different assets like pipelines, storage facilities, and processing plants. This means they can make money at different stages of the midstream process, so they're not relying on just one thing for revenue.
They're not putting all their eggs in one basket, so to speak.
Exactly. They're spreading the risk by doing different things. And they also have a strong presence in different parts of the country. Their assets are in important energy-producing areas all over the U.S., which gives them access to lots of markets and customers.
So they've got both operational and geographical diversification. That sounds like a company that's in a good position to grow and stay stable. But we've talked a lot about the good stuff. What about the potential risks or challenges that are specific to the midstream sector that investors should know about?
Of course. One of the biggest risks for midstream companies is regulatory uncertainty. The energy industry is heavily regulated, and any changes to those regulations could affect how they operate and how much money they make.
That's true. It's a tricky area, and investors need to stay up to date on any potential changes.
Are there any other risks that are unique to MPLX that we haven't talked about yet?
Well, we mentioned competition before, but it's worth saying again that the midstream sector is getting more and more competitive. MPLX is facing pressure from other big players, so they have to keep innovating and staying ahead of the game.
They can't just sit back and relax.
No, they got to keep pushing the boundaries.
Yeah.
But overall, when we look at MPLX, we see a company with a lot of good things going for it. Strong financials, a solid history, a diverse business model, and they're in a sector that can be really good for investors who are looking for income and stability.
You know, one thing that really impressed me was their dedication to giving back to shareholders. We talked about dividends, but what about their share buyback program? Can you tell us a bit more about that?
Yeah, definitely. Their share buyback program is another way they show they care about their shareholders. By buying back their own shares, they reduce the number of shares out there, which can make each share worth more and potentially increase the overall value. So it's like they're saying, hey, we believe in our company and we think our stock is a good investment.
Exactly. It shows they're confident about the future. And when you consider that, along with their regular dividend payments, it really shows they want to reward their investors.
Now let's talk about the energy industry in general. MPLX is part of the midstream sector, which we mentioned before. Can you explain why this sector might be a good area for investors?
Sure, midstream companies are essential in the energy world. They handle the transportation, storage, and processing of oil and gas. And because of that, they're not as affected by changes in oil and gas prices compared to companies that are focused on finding, producing, or selling those resources.
So they're kind of like the stable force in the energy industry, not as vulnerable to the up and downs of oil and gas prices.
Yeah, that's a great way to put it. That stability can be really appealing to investors who want more predictable returns. And midstream companies often have strong and consistent cash flow, which can lead to attractive dividends for investors.
Dividends, that's always good to hear. Now, speaking specifically about MPLX, what sets them apart from other midstream companies? What makes them unique?
One of their biggest strengths is their integrated business model. They have a diverse range of assets like pipelines, storage facilities, and processing plants. This lets them make money at different points in the midstream process, so they're not relying on just one source of income.
That they're diversifying their operations, not putting all their eggs in one basket.
Precisely. And they also have a strong presence across the country. Their assets are strategically located in key energy-producing regions all over the U.S., which gives them access to a wide variety of markets and customers.
So they have both operational and geographical diversification that definitely contributes to their stability and potential for growth.
Yeah.
We've talked a lot about the positives, but let's address the potential challenges as well. Are there any risks or headwinds specific to MPLX that investors should know about?
Of course. One thing to think about is the regulatory environment. The energy industry is heavily regulated, and any changes in those regulations could affect how they operate and how much profit they make.
That's a valid point. The regulatory landscape can be unpredictable, and it's definitely a risk factor to consider. Are there any other challenges specific to MPLX?
Well, competition is always something to keep in mind. The midstream sector is becoming more and more competitive, so MPLX needs to stay ahead of the curve by continuing to innovate and be efficient.
So they can't afford to rest on their laurels.
Exactly. But when we look at the big picture, MPLX has a lot of positive attributes. They have strong financials, a proven track record, a diversified business model, and they're in a sector that can be really attractive for investors who are looking for income and stability.
All right, folks, there you have it. Another episode of Investing Talk Podcast is in the books. We've covered a lot today, from MPLX's financial performance and growth prospects to their commitment to sustainability and shareholder value. We've explored the potential opportunities and the risks.
We hope this discussion has given you valuable insights and a better understanding of MPLX.
Ultimately, the decision of whether or not to invest is up to you. But we encourage you to do your own research. Consider your investment goals and risk tolerance, and make informed decisions that are right for your individual situation.
And if you enjoyed this episode, please subscribe to Investing Talk Podcast so you don't miss out on future discussions. We'll be diving deep into other interesting investment opportunities.
And don't forget to share this episode with your friends, family, or anyone who might be interested in learning more about investing.
We always appreciate hearing from our listeners, so please leave a comment and let us know what you thought of MPLX. What were your key takeaways? What other companies would you like us to explore?
Until next time, happy investing.